Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about the top 3 best dividend growth stocks to buy right now. In this video, we will be going over my top 3 picks for September, so you're definitely going to want to buckle up and stay tuned for this. We're talking about stocks that are steadily growing their dividends, and their current dividend yields are between 6.8% and 9.4%. On top of that, the share price itself of these companies and stocks could actually grow alongside their dividends, meaning that you are getting literally triple the growth here. For instance, you're going to be making money from their overall stock price appreciation, you're going to get passive income in the form of their dividends, and they are growing their dividends at a substantial rate. So you are getting growth in 3 different ways here. So for investors who are seeking to earn passive income in the near term, here are some of the best stocks that you should look into or at least add to a watch list. Now remember, your portfolio is unique and I don't know exactly what is going to be best for you, so always make sure to do your own research. But with that being said, go ahead and annihilate that like button for more videos just like this one. Comment down below your favorite dividend stock that you enjoy buying. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, but if you can't afford that, don't worry. By subscribing, you're going to get this content for absolutely free. And with that being said, I say let's dive right into today's stories. We're going to start off with a monster dividend growth stock, which is currently yielding around 9.4% for their dividend yield, and they also have an upcoming catalyst which should increase their overall share price, and that is going to be a huge acquisition that they are undergoing. And the company I'm talking about is none other than Energy Transfer, ticker symbol ET. This is a midstream oil and gas giant, and they are making all of the right moves to grow their overall share price and to grow their dividends, so they can support that very high 9.4%, which is going to give you phenomenal passive income. Right now, ET shares trade for around $13.55. However, the best part about this company is that they are actually undervalued according to professionals. For instance, the minimum price target that I could find for the stock was $15, meaning that even the most bearish negative critic thinks that this company is undervalued, and that means that you as an investor, if you buy now, are going to get a phenomenal deal on this stock. However, on the flip side, the most bullish analyst that I could find from a reputable source gave a price prediction of around $22 over the next 12 months. So knowing that the company is undervalued, we are going to get phenomenal growth from the stock, and if you look at their overall share price, you can see that over the past year or two, their overall share price has been climbing at an astounding rate. And not only that, they have a very strong dividend yield coming in at around 8 to 9% right now, and they are also making moves to grow their overall dividend during this time, on top of that phenomenal acquisition, which we will talk about right now. Over the past few quarters, this company has been laser focused on paying off a lot of their debt, so they can now focus more on growing their overall dividends. And they even recently announced a goal of increasing their dividend payout by 3 to 5% every year as they invest billions of dollars to support that overall growth goal. On top of that, they also acquired Lotus Midstream for around $1.5 billion earlier this year. And they are also now looking to acquire Crestwood Equity Partners in a $7.1 billion all-equity deal later this year, which is going to act as a phenomenal catalyst which will increase their overall share price. Energy Transfer expects this acquisition to be immediately effective, and it's going to positively impact their overall distributable cash flow per unit. In other words, this acquisition should lead to enough cash flow to allow Energy Transfer to grow their overall dividends at a very steady and constant rate without burdening them as a company. Considering that the share price is low enough to where it's undervalued right now, they have a phenomenal dividend and they are undergoing an acquisition, and the company is growing their overall share price. This is one of the best high-yielding stocks to buy right now, especially if you want to gain some passive income. So feel free to look further into that company. Up next, another no-brainer dividend stock to buy is NextEra Energy Partners, ticker symbol NEP. Although high interest rates have muted their overall quarterly numbers, the company hasn't stopped growing their overall cash flows and of course their overall dividend, because their dividends are consistently pressing even higher. If you're not already familiar familiar with this company, this is a renewable energy company. And since renewable energy stocks have lost around 1/3 of their value so far in the last year or two, this is a phenomenal time to pick up shares. For instance, just like the previous company we talked about, this company is also undervalued. They're currently trading for around $50 per share, while even the most bearish negative analyst believes this company is worth at least $60 per share, while the most bullish analyst from a reputable institution believes this company should reach a price target of $86 over the next 12 months, thus indicating that because this company doesn't fall in between this range of a low of 60 and a high of 86, this company can be considered undervalued. You can see from the overall stock chart that this company has indeed cooled off over the last year or two, but this would just make it an amazing buying opportunity considering their 6.74% dividend yield. However, this company gets even better, and I quote, "In its most recent quarter, NextEra Energy Partners increased its annualized dividend per share by nearly 12%. Through 2026 at least, the company expects to increase its dividend annually by 12 to 15%. That's solid growth, especially considering that NextEra Energy Partners will be selling off its natural gas assets over the next couple of years to convert itself into a 100% renewables pure play," end quote. So this is amazing. Not only is their overall share price growing very rapidly, and this company is transforming itself into a 100% renewable energies play, but they are growing their dividends between 12 to 15% per year from now until 2026. So the upside potential and the passive income that you could obtain from this company is literally insane. NextEra Energy Partners also generates loads of cash flows, and they do this through their contracted assets, so their dividend stability is not a problem here. You should also know that the company is investing into a humongous pipeline of wind and solar energy projects, which will expand their overall renewable energy portfolio. And this portfolio currently exceeds 38 gigawatts, and it could lead to acquisitions. However, the best part is that NextEra Energy Partners believes it could add nearly 300 gigawatts of capacity from potential acquisitions and industry growth through 2026. So this company clearly has a phenomenal growth trajectory, a very strong dividend yield, and their dividend is growing at a very rapid pace. So right now could be a great time to invest into NextEra Energy, but again, always remember to do your own research to make sure this company is right for your personal portfolio. Last but not least, let's talk about Devon Energy, ticker symbol DVN. Many passive income investors flocked to Devon Energy due to their fixed plus variable dividend framework, which rocketed as crude oil prices surged. Right now, the company trades for around $50.66, while the low-end analyst price target on this company is $38, and the high-end analyst estimate is $79 over the next year. Currently, this company offers around 8.9% for their dividend yield. However, these dividends are subject to change because the stock's dividend has two different components. It pays a fixed dividend every quarter that's sustainable through market cycles, and then pays out a variable dividend of up to 50% of the free cash flow remaining after funding of its fixed dividend. However, fundamentally, the company is rather solid considering that they aim to increase production by a modest 5% per year. If you're not already familiar with this company, they are a gas and oil giant. Although you should be aware that the oil market is very turbulent right now, so please be careful. Thanks to the company's fundamentally prudent strategy, it makes this company very safe and appealing to a multitude of dividend and passive income investors. And many investors are investing into this company because it gapped down by around 18% this year while still yielding a very high dividend yield. However, out of all of the companies on this list, Devon would be my last one that I would pick on this. The other two, in my personal opinion, are much stronger long-term holds that will give you passive income for years to come. But with all of that being said, I would love to leave it up to you. Which of these companies do you like the best? Don't forget to comment down below your thoughts. Subscribe if you are new, smash that like button if you made it all the way to the end of this video, and subscribe for more videos just like this one. With that being said, I will see you in the next YT video.